Hello, good evening. Welcome to TWINO FinTech Talks, number 9. I'm very happy to be here with you. My name is Robert. I'm TWINO Investment Platform Lead, and I'm here today to lead our discussion on the topic of investments. So we'll go all over different kind of investment topics that will include such as the hottest stocks in last year and also this year, then also cryptocurrencies on the stock market that has reached an all-time highs, and many other topics that will be on our topic. And we'll also try to guide you through some of the maybe the very first steps if you are new to investments. I'm very glad that we have also a very strong panel with professionals from multiple industries. So from the traditional banking, from trading, from Nasdaq, and also from such companies as Funderbeam and Change Invest that are fintech companies. So we have a good panel of professionals that will guide you through our theme. And maybe just to start, I will also mention that this is a side event of Textual Conference that is happening right now, this time not in real life, but in online, as most of the events have been happening for the last year. But nevertheless, we hope that you will have definitely fun also in other events that will happen during the conference weeks, this time not one specific day. And we have been cooperating already for many years, and this has been one of the most successful side events, so we hope that this time as well you will have a lot of fun and also useful information. But without any further ado, I will start by introducing our panelists. So today with us, there are five professionals, and let me start by introducing with Kaidi Rusalep, who's founder of Funderbeam. So there's Kaidi. We also have Liana Dubova, who's a member of the management board and head of Baltic Issuer Services at Nasdaq Riga. Then moving to the guys that we have is Christian Kangro from Change Invest, who is founder and CEO of the company. Pols Miklashevich, who's Chief Asset Management Officer at Blue Orange Bank. And last but not least, Thomas Kralov, who's a trader at his own company that is called by his name, Thomas Kralov. So those are our speakers for today, and I will ask the very first question, which will maybe let you understand their background a bit better. So the first question is, how did you start with investments? What was your part in this sector? Maybe we can try to start discussion with Kaidi, who was the first one that I introduced.
Thank you, and super honored to take part of the event and share the stories of investment with such a distinguished panel. And you don't believe my story, but my interest into investing started when I became the CEO of Estonian Stock Exchange, which is now part of Nasdaq. So I was working in the system and taking care of everything that is related to the post trade. And then all of a sudden I was head of exchange. And since then, obviously, keeping an eye on what is happening not only in exchange markets, but also the way investing and all the investing community changed, the investing landscape changed, the markets changed, how nicely the global investment scene is connected because of the technology. And now Funderbeam is a younger brother of Nasdaq, if we can say so, because we enable global growth companies to raise the funds, and we also let investors to trade with the investments. So definitely there is a new area of investments, and maybe one thing what I would highlight also at the beginning, compared to the landscape when I entered to the market, when becoming the head of the exchange, is the access to the investments and the access to global investments. So I think we will open up this topic quite nicely for a wider audience.
Great. Thank you very much. Maybe you can move forwards with Liana.
Yeah. Hello. Good evening. It's a pleasure to be here. And if talking about me myself, then my first interest about the investments and stock exchange and all the capital market concept actually rise during the university time. I actually was studying hard how this all works, how the system works, and was also defending the bachelor thesis and later also the master thesis on the stock exchange topics. So it was like quite an early stage. Actually, at that point of time, I couldn't imagine that in less than 5 years I will end up working at the Riga Stock Exchange. And yeah, so I'm in the capital markets since 2003. Before that, I was working in banks, so I have some understanding about that side as well. And now I have that privilege on the daily basis to consult the very ambitious and growing companies in the Baltics who are willing to grow and who are ready to be transparent. And yeah, so I'm managing the team, taking care of all listed companies at regional Nasdaq Baltic Exchange. So at the moment, in total, we have like around 100 different instruments available for investors on secondary market, and very different ones, different risk profile, different industries, sizes, and from all over the Baltics. So there is something to choose from. About me, myself, investing, nothing very exciting due to one simple reason. As an employee of Nasdaq, I have strong limitations to invest in certain assets. So I have Nasdaq shares and I have invested my money in some other traditional assets. So nothing very interesting from that perspective.
Thank you, Liana. Maybe let's go to Christian.
Sure. First of all, thanks for TWINO for inviting me here second time already. Always a pleasure. And obviously Dara, a distinguished guest as well on the panel, so thank you. Yeah, I'm Christian Kangro. I'm the CEO of Change. Change is one of the leading cryptocurrency brokers in the Baltics and the Nordics. So we have over 100,000 verified customers, and we're growing around 10x every year, including this year. So yeah, super glad to be here. I think like the only thing to mention here as well, like what is Change's mission? I think like financial system should be borderless, and cryptocurrencies are allowed to do this. So hopefully we can discuss about how we can make a borderless financial system in the panel as well. So thank you very much.
Okay, Paul, maybe you can continue.
Yes. Hello, everybody. It's a pleasure to be here with you. Thanks for TWINO for inviting me. Yes, I started my career in Canada as a summer student working in brokerage firms. And then after that was an institutional trader at a mutual fund in Canada, where we'd move large blocks of stock. Now you can press a button and buy as many shares as you want almost. But back then, in those days, you'd have to call, and we had lines to 40 different brokerage firms, Goldman Sachs, Merrill Lynch, you name it. And it was a very interesting time. It was the end of the previous tech boom, which we were seeing a lot of parallels to right now, that transferred then into the growth and development of the Chinese economy after 9/11 and after China got entry into the World Trade Organization. So after that, we did quite well as Canadians on the stock exchange in that period when China was buying anything you could dig out of the ground. I moved to Latvia and I've been working in asset management here for the past 12 years. And our goal is to manage money for our clients and to compound their wealth with time.
Perfect. Thank you. And Thomas?
Last but not least, hello everyone. My name is Thomas Paulo, and thank you, TWINO, very much for the invitation. Enjoyed these kinds of panels very much. Hopefully I can bring some value to it. As far as I'm concerned, as well as some of my history, it's an interesting one. I've been into the financial markets for about 80 years now, I would say. It started off with simple stuff when I met some of the guys who were into active trading as well as investments. And they basically introduced me into the world of, you know, that hyperactive day trading stuff. And that's something that I've been into for a while. It's been one of the craziest rides of my entire life. So people who are associated with in this panel as well, associated with the markets, they know exactly what I'm talking about. This is like trying to predict the smallest frequencies of the market, which is almost like suicidal, but I managed to survive it because of consistency and extreme hard work, as well as patience and proper information. And after that, I've gone into education. So I've basically put together one of the best trading learning programs, which encompasses active trading as well as the world of investments. And me personally, I'm also gone to portfolio building as well as venture capital, looking at different startups, IPOs, ICOs, crypto, many things. I'm just a very flexible private investor, but private to a point, because if you really want to go into the B level as we speak, then you really want to get some of the funds, some of the assets under management. I have a few people whom I'm working with in Dubai. That's where I live, and we are currently working on establishing our hedge fund in Dubai, which is going to be focusing on venture capital, stock portfolios, crypto for a small portion of the portfolio, and etc. Mostly tech, from the venture capital, mostly tech and medical, something that has explosive growth potential. So I'll be focusing more on that kind of stuff. But yeah, I started with small stuff, something that you can normally learn on the internet somewhere from some courses and stuff. And that's how you get into it, in my opinion. I mean, on a private level, because when you're going into stock investments, venture capital, or private equity, God forbid, you need millions of dollars to do it. And it's not exactly accessible to regular people. So you got to start somewhere where most people lose, which is high risk. And I guess I'm one of those survivors, and still sitting here, still breathing, but many projects on the table. It just enabled me to move forward and develop, meet new people. And yeah, right. That's pretty much it about me.
Thank you. Wonderful. So we heard introductions from all our panelists. One thing that I should also mention that I forgot in my introduction was the fact that you can also ask questions. So you can use our Slido link or yeah, I believe that you see something on your screen. If you don't, you can go to our Facebook event and there will be a link and you can follow that as well. And then at the end of discussion, we'll also go through at least few of those questions. So just go there, upvote the ones that you want to hear, and we'll try our best to answer those at the end. So moving forwards, I think it's also very interesting for our listeners to understand your investment background. So maybe let's just do a little poll. So I will ask you a couple of investment types, and you can just raise your hand virtually this time, so that our audience would see what is your experience. So who of you are or have been investing in stock market? Okay, one hand. Okay, I guess maybe the real hands are better because the other way it's too difficult. So stock market obviously is something very popular. Moving to the next hot thing, cryptocurrencies. Okay, 2 participants. And Christian with both of his hands. You can also see Bitcoin logo on top of his head, so it's quite obvious, right? Then also maybe your experience in crowdfunding or peer-to-peer lending. No.
Does discount if we're listed on Funderbeam as a startup?
Yeah, of course. And ETFs and indexes, so maybe some investments in funds.
ETFs, yeah.
Yeah. Okay, thank you. I think that I have just a small time lag for your videos, and that's why for me it's a big pause until I understand when you have risen your hands. Okay, I think that I hope that this helped also to our audience to understand which questions you can address to our panelists and speakers. But to move forwards, maybe let's take a step back and take a look on 2020, which of course was a different kind of year. We saw the markets fluctuate a lot and a lot of things happening in the markets. Maybe you can answer some of your or maybe what kind of experience you saw it through this year, and maybe you had some learning lessons, and can you compare it to the previous crisis, or this was a bit different kind of beast that we saw last year? Maybe you can start with Pulse as the first one.
Yeah, this crisis was obviously different from any that we've experienced in our lifetime. But again, it reminded us of timeless aspects of fear and greed. And what we saw was ostensibly a lack of liquidity in markets that was saved by the actions of central banks. And we'll have to pay back the central banks in terms of our complicity, of our having to be compliant to them and governments going forward, as this money that's been spent now at some point will have to be paid back in the future. But we were saved by central banks, and in comparison to different crises, they acted swiftly, strongly. There was bazooka money coming at the markets, and you could see very clearly the inflection point. But with markets, when they start to fall, it's very hard to catch a falling knife. Any trader will tell you that. And it turned out that the central bank saved us, and that's where the market started to recover. But at no point was it easy. It's always easy in retrospect, but it was not easy at that time. And again, it just serves to remind you that liquidity can dry up in markets. And if you're managing money for other people, or if you're managing your own money, that is the foremost concern that you have, is managing liquidity.
Thank you. One thing that you mentioned is that central banks helped us, or kind of came as a helping hand in this crisis. Maybe you can elaborate a bit more on this topic as well, and what does it really mean for us, maybe regular people, on the just regular people.
Yeah, for regular people, I think one of the things that has been a bit beguiling in terms of trading right now is that since the turn, everything's been going up, and it's been very easy. And especially if you've been involved in the tech sector or in crypto, you've done very well for yourself. But it serves to remind you that the reason why this has been possible is because of the massive amounts of money. These are unfathomable amounts. We can't even picture how much $15 trillion is. And this is how much money has been pumped into the markets since the crisis. So it's enabled bubbles in many different asset classes, but ultimately, if you're an investor, you have to look at what institutions are doing, and institutions follow the actions of central banks, and that is the number one thing for investors to understand. And it's central banks are the ones the people that write the rules. I know that crypto, one of the things that is appealing about crypto is that they think that you can change the rules and crypto will abide by its own set of rules. We'll see, that might be able to happen. But at the time being, the central banks have all the dry powder. They put liquidity into markets. And we see that without them, we would have been in a lot of trouble. And they actually saved the economy and a lot of market participants as well.
Mm-hmm. Thank you. And if you can just basically jump in, maybe to tell about your experience in 2020.
Maybe I'll just start because you talked about money printing already. I mean, I think like one thing what everybody needs to understand about 2020, there is unprecedented amount of money being printed in the world right now. If you think the history of money, there used to be basically seashells, there used to be class beads. Then we basically found gold as basically the only asset what is not basically like doesn't have an infinite supply. Then if you just go to the Second World War, then we had the gold standard. So basically US dollar was basically linked to gold. And then at some point they just kind of lost this kind of a link to gold and just started printing endless amounts of dollars, and also in European Union euros. And if you look at, for example, Bitcoin, then actually in Bitcoin code was actually one paper when the first time the banks were bailed out, in the first financial crisis in 2008, 2009. And I think obviously asset prices as well, but the Bitcoin rally is behind of unprecedented money printing. And as a recommendation also to stockholders, I mean, most of this money went to actually stock prices. So you would think that, the inflation would come because they're printing a lot of money. Obviously, when the inflation actually went to stock prices, then let's say normal people on the street didn't get richer, but only the guys who held a lot of assets. So yeah, that's the only thing what I would like to kind of add on this. So I think people are losing faith in euros and US dollars, and I think cryptocurrencies is one of the solution to kind of counter this.
Yeah, that's something that I could absolutely agree with, and I agree with both with Pauls and with Christian that in terms of euro and dollars, I mean, I'm looking at this whole picture for a while, and I'm just waiting for that complete shift of the world to something that is ever so slightly more sustainable than dollars, even if you think of the whole amount of dollars there is in the debt and how much is being printed. I mean, why are we even still using it? It makes absolutely no sense.
Exactly. We can only use it as long as we're printing money. If we stop printing, then it's going to be an interesting situation.
But it has to end, right, at some point. So, but these kinds of times, it's, as Warren Buffett also says, that when there is a time of crisis and the things become so cheap to buy, this is the time to put in a lot of money into it. I mean, I've done different kinds of trading, but whenever a crisis happens, even in Russia in 2015 with Crimea, when all the Russian stocks went down a bit, it was an amazing opportunity to buy AAA stocks at a 30% discount and then just basically make at least 30% in them and then collect 10% dividends. Russian stocks are one of the best for dividends. Just such an amazing time when everybody is selling, you're buying. Well, as long as you're buying something that doesn't have intrinsic reasons to fall, something that, just going to the toilet, basically. But when the company just becomes undervalued short term. So it's absolutely an amazing time to make a lot of money, because it's hard to make a lot of money when the times are good, unless you are in a different type of trading than I am, of course.
You can't confuse the creation of credit with the printing of money. And right now we've had the biggest role that central banks play in providing this credit, which allows for many miscurrencies, it allows for many positive things, but ultimately central banks supply liquidity to banks, and it's banks lending money that creates money. So it's unquestionable that this boom, this ability to get credit has been an incredible boom for cryptocurrencies. Whether or not they're rising because of inflation will remain to be seen, because we haven't actually seen inflation come into the picture as of yet. And in fact, we are seeing that more in commodities than in actual cryptocurrencies. So it doesn't stand to reason that central banks printing money means that crypto is positive. It just means that more money has gone into the pockets of people that are starting to invest. Crypto has been going up, and they have a tendency to follow what's hot. If that's going to end well, we'll see. But it's not the same thing as what's happened previously in crises.
I would also add a bit different angle. You've been looking from the top down, now looking from the bottom up, is the households. And when we're talking about the households, I think there was a nice article the beginning of this year in, was it the New York Times, talking about how much household spends each year. And it's normally 2 trillion, the global household expenditures. And because of COVID and people sitting at home, the expenditure last year was only half of it. So where will this second half of it go? And it goes in different investment instruments. It goes into art, it goes into crypto, it goes into real estate. So investment, in a way, looking from the household point of view, is booming as well. And there's a free capital available also from retail investors and retail investor point of view. And when I'm talking right now to a couple of investment bankers, what they say is now a new IPO boom driven by retail investors. So that's one point maybe that would describe the 2020. we will see the impact of it maybe in a couple of years, but these are basic facts. And maybe the two other interesting things I would mention, because I'm in the startup investment field, and I lived in Singapore last 2 years. And when we had the first lockdown and many of my friends are VCs there, then they kind of said that, oh, how can I do my job? Because I can't meet people face to face anymore. So the outcome again of it is that the investment moved into online reality. Online platforms, digital fundraising, digital investing, digital VC meetings, all of it. So in a way, this kind of online meetings and the events what we held right now is again new reality in VC industry. And maybe the third what we see is the massive oversupply of VC capital. When I started as a startup founder in 2013, investment rounds of 10 million euros, 50 million euros were something that everybody was talking about. Now, if I check the latest numbers in April, funding rounds, 300 million, 800 million, 500 million. This is where you get the storyline. So the massive supply of capital maybe is something that describes 2020 most. Online and supply of capital.
And I can add actually to what Kairi just said regarding those household savings. I would say even more. According to bank statistics, it seems that most of that money, which is not spent in whatever travel and shopping or whatever, is laying on the bank accounts, meaning not really earning anything. So it means that this is the money really kind of available for companies. So if there are like among our listeners, there are some company owners or so, I would say this is the moment. So all those people are there. Another thing, I think, if we look a bit like from the kind of sustainability aspect, then for all of us who are here and also perhaps other market operators or let's say platform runners or so, it is our responsibility to make sure that those retail or private investors who are doing those investments, they are doing it mindfully. They are doing it really, making really well thought through decisions, and in order really not to kind of allow really let's say bad things to happen. So that's why I think this financial literacy and education of those investors is or those active private investors who are just stepping into this for first time is very, very important aspect, and we should really be there to support them. Of course, this digital whatever setup we are living in allows, as Thomas said, you can actually quite easily access whatever sources and gain the knowledge and do that. And also, if you look back from 2020's perspective, I think for Nasdaq it was like perfect year, because active trading daily numbers were like doubled. So of course, it was a good year. Also, it was good from the IPO's perspective. It was even better than 2019 here in the Europe. And also in Baltics, we managed to get some more than 20 new financial instruments on the list, so investors can invest in. So all those things are kind of the overall the year was very, very positive. And returning to those retail investors' education, just to add that also last year proved the rule of the diversification, I think, because as we saw that not all companies, not all industries were affected equally. So we have some companies who are out of business totally, then there are some who are actually benefiting from all this. So it's it just proves the one thing, that diversification is something to remember when doing investments.
Okay, thank you very much. Many of you already mentioned another thing that I would like to discuss, which is retail investor segment. So let's jump to that, as you spoke about that quite a lot. Well, I would say more maybe this year, we have seen quite a lot of retail investors coming to the market. As many brokerages are reporting their numbers, then the registrations are at all-time highs. So we definitely see that the interest is there. But maybe to understand whether this is something to stay there, how long do you anticipate that the retail investors will be the ones maybe even driving or controlling some of the markets? Where do you see this retail investor interest going in maybe this year and in the next 12 months?
My answer to that would be that we would really look forward to grow retail investors' interest, because you know that our markets in general in our region, it's very like young in a way that we have like a bit more than 20 years of kind of in the capital markets and so on. So I believe that there's a totally new generation in the market coming, like people who have something learned at school, who have heard something, who have done some investing from very young age. So yes, I think if we talk about our region, then I think there's a way to go still and develop and grow this.
About the retails, I think maybe one of the keywords to be used here is disintermediation, and also the online and access to investments to retail investors. So we see a lot of FinTech companies building something what used to be the monopolies of large financial institutions, and now this FinTechs cuts the large institutions and make access to retail investors, also global access to retail investors. But I think one thing what the retail investors how to be aware of, and that's now reflecting back to the GameStop case and Robinhood case. Do they really run the market, and are they power of the market, or will they be run? Who holds actually the power? And not always retail investors hold the power. So this it needs a bit time, and maybe even this new generation of online sophisticated retail investors, and this I think we see in the next 5 years time to come, the young new generation of well-educated online retail investors.
From my side, I mean, Change itself is basically a cryptocurrency application where you can also invest in Tesla, for example, with 10 euros or Bitcoin with 10 euros. And I mean, I can just go back to January, where our platform grew, I think, 14,000 users in 1 month. So all the different departments were on fire, basically. I think I'm not sure whether I would agree that the growth rate of retail investors will actually grow, because I mean, everybody was at home. There were nothing to do. So I think the sheer amount of numbers starting to use investment apps, it was crazy. It was completely crazy if you look at Coinbase numbers, if you look at Robinhood numbers. So actually, I'm pretty interesting to see how this growth will continue. Definitely, this industry will grow. The millennial investor numbers, absolute numbers will grow, but I think the growth rate will actually go down when everything opens up again. But I think one thing to mention more as well, and I mean, maybe Kairi can also kind of reiterate on this point, but I think some of these platforms who are big now on this basically this COVID situation, I think they really consolidated their position. because when they had the platform ready, they have the marketing channels ready, they really grew a lot. And kind of like, I think it's going to be difficult for new entrants to come to this mobile investing market, especially in developed markets like US and Europe. What do you think, Heidi?
It's an interesting thing. I think it's an involvement of every new markets. We see the same patterns of tech companies, and then the startups, and then the VC investments, and now all this tiny little online FinTech service providers. The question is who will consolidate with whom, and who holds the power if the FinTech is going into the mainstream financial service industry, or the industry itself is going and adopting the young players. So like I said, I think for the next 5 years, it's quite interesting to see how the financial services and especially as you mentioned, these retail apps and retail service providers grow. And one good example obviously is Wise, previously known as TransferWise, growing up from just currency, sort of like a currency exchange, but now becoming a real bank and providing services all across the globe. So I think we see a lot of interesting new service providers coming.
Yeah, for sure. And but obviously, like Western markets, there's these apps like Robinhood. But like if you take like developing markets, I mean, Thunderbird and Change both have offices in Singapore. Obviously, like one of the first investments what many people in developing world made was in crypto, because everybody can access this. It's really accessible. It's without borders. And I mean, that's an interesting space to look as well, like this crypto space and all of the little altcoins and the smaller crypto investments out there.
Paul, Thomas, do you have something to add on the retail side, or we can move towards?
Maybe just a small thing, we was listening to the projections in terms of the development of the retail segment of the market. I mean, if you look even the interest curve in the Google searches, then it's always been a steady growth in the interest in education, for example, in the world of trading as well as investments, and it has skyrocketed. But if you think about it, then once life goes back to normal, and hopefully it does go back to normal, then people will actually go back to their normal lives. And the second thing that you really have to consider is that how many people are going to actually leave the markets empty-handed, meaning that it's just from speaking from personal experience. I've launched this educational program not that long ago, and I have about 2,000 students right now. I mean, but still, from my experience of speaking with retail investors as well as traders, and most of the time when they come to me and I see what they're doing, sometimes we have some discussions, and where we have a chance as a team to look at what people are doing. And for me, it's just there is zero logic, there is zero consistency, there is zero explanation, there is zero understanding of fundamentals of any companies that they're investing in. So it's just, if from the investment perspective, they're just blindly trusting some YouTubers, they're blindly going after some crap like GameStop. And I mean, how can this end? I mean, most of the time, some people who are going into these pumps and dumps in any scheme, some of the people will make money, but the percentage is quite low. So most of the people will still blow their accounts and go back to normal life. So I don't think that this number and this hype of markets is sustainable in a long run.
Yeah, this is the third kind of market we're entering where I think a lot of retail traders will lose all their money. The first one was the dot-com boom. The second one was leading up to the financial crisis, and now we're seeing a lot of the signs of it again now. JP Morgan, I think it was JP Morgan, said prior to the 1929 stock market crash that his shoe shine boy was giving him stock tips, and he understood that it's game over. And we're seeing a lot of anecdotal evidence to similar things now. YouTube craze is unbelievable. As Thomas mentioned, there's no looking at fundamentals and what is actually investing. You're looking at companies and you're buying their future cash flows. You're buying their future profits they'll deliver to their investors. And if you're looking at crypto, there are no profits, and there probably never will be. But if you're looking at the more speculative side of the tech market or of the companies getting VC funding, yes, a lot of these investors are exiting. The early investors are exiting with money, and there's IPOs. But think about the concept of if a company like Coinbase is deciding to sell itself into the public markets, what kind of a signal is that? If the guys that are running these exchanges are choosing to cash out, do you think you should really be on the other side of that trade? So there's been a lot of opportunities in terms of making investing less expensive, on it being more accessible on a global basis. But with opportunity comes responsibility. It has to come responsibility. So you have to be very careful. And as retail investors, just make sure you never get taken out of the market. Make sure that you always have enough money to keep playing, to take hard lessons. And in the institutional investment community, we laugh about it, but as soon as you think you're a genius, you should just sell at least half your portfolio and just get out. Because I'm talking to you from Greece right now, and the ancient Greece will tell you about hubris and about flying too close to the sun. So investing takes not only humility, but also a good sense of humor, and not to think that one thing will continue always in the way that it's moving currently, because what the market tells you is there are cycles, and the market's job is to take your money, not to make you money.
Yeah.
In the short term.
But Paul, can I just comment this crypto thing? But it's not, all the investments are not about cash flow. So take physical gold, for example. Physical gold does not have cash flow, but it's worth like 6 trillion or like $20 trillion in the world. So why does Bitcoin needs to have cash flows when physical gold, for example, doesn't have cash flows, but it kind of replaces?
Well, the statue of Athena and the Parthenon was not covered in Bitcoin. It's covered in gold. There's historical reasons why we stick to gold, and we believe it to be an investment. And in terms of being a hedge against inflation, it served that purpose over history. We'll see if Bitcoin is able to do that. I'm not so sure. And until you go through a complete cycle, you won't be able to say the answer either way. So yes, in terms of the opportunities and the technologies that are being developed, they're fascinating. And I can't invest in Bitcoin for my clients. I'm not allowed to. So and honestly, there's enough opportunities in the market as such in publicly traded companies to find extremely interesting companies. You'd be just as well off having bought Shopify as most cryptocurrencies over the same period. So there are opportunities in public markets where you have companies, you know what's behind them, you see audited financial statements on a quarterly basis, and you know what these companies do. It's not just about some sort of mania that's been conjured by a YouTube blogger or Elon Musk at 3 o'clock in the morning tweeting about some cryptocurrency.
But in a way, I continue where Christian ended, and also what the new millennials and a new age of investors may bring in is the question around fundamentals. And always the question is, when we talk about the investors and investments, where do they see the value? Do they see the value in fundamentals, or do they see the value in brand? And when I look at the behavior of new investor base, and at the end of the day, the value of the company is given by the buy side and the sell side, right? We use the fundamentals, but again, social responsibility, all the ecological footprints, and absolutely everything is something that is coming, and this new way of running the companies, and the strengths and the social strengths of the brand is something that the new generation of investors value more than basically only the fundamentals. So I think this is in a way this shift between the ages, between the values, between the valuations. I fully agree with Paul's that this early 3 a.m. tweets should not actually run the stock markets. That's insane. But with the new kind of more social responsible investors, where the value is, it's going to be changed maybe for the next 10 years. And we need to get ourselves ready that the value is not only in fundamentals.
And what Kari says is perfect, because right now talking about cryptocurrencies and values that go beyond just money. The energy consumed in mining Bitcoin is equivalent to Norway's expenditure in energy. How do these things align?
Yeah.
And I do believe that investors will look to cater to social purpose, to the conversion to green energy and the electrification of our economies. and the driving forces will be governments. And so if I'm an investor, I'd rather look at where governments will be spending money going forward than what somebody's tweeting on YouTube. And that will be the difference between making money and lasting in this market and being cashed out on a margin call or something going to zero.
Yeah, but by the way, like this, I think like this Bitcoin energy like debate, it's all about like what's the price of freedom. So, for example, if you have US dollars or euros today, like US government can take it away from you. Like a Chinese government can take your yens away. Nobody can take your Bitcoin away. So the question is, what is the price of freedom?
Kristen, the IRS can take anything away from you it wants, and until that changes, crypto is. As soon as the IRS says that they will apply a higher capital gains tax to crypto than to other investments or publicly traded companies, it loses half its value overnight. And if you're sleeping that night, then forget about it. So if you want to be fully invested in an asset class where the US government can basically, and why not? The Europeans could do the same thing and implement capital gains taxes on crypto or proof of purchase and proof of where you got these crypto coins from on the blockchain, you're wiped out. So please go ahead.
Yeah. But it's not about IRS. It's about like corporations and the government controlling the monetary system, or whether the people will build their own financial system basically between themselves. It's not about IRS taking the tax dollars away.
Do you live in a country where you pay taxes?
Of course.
Can they put you in jail?
Of course.
Then you will not be saved by crypto.
No, but the whole world, like if you live in a country like Venezuela, the government brings you so much money where you basically lose your money value like per every day, every week. Like in Bitcoin, like there is some kind of like stable.
Where inflation goes crazy is when you cannot tax your economy. And in Venezuela, because they destroyed their economy, they could not raise money through taxation. As long as you can raise money through taxation, you are not at threat of hyperinflation. Read anything. The reason why there's hyperinflation in Germany is because they lost their tax base. That they're politically divided, and the people that could pay taxes did not want to, and people started speculating. It had nothing to do with money printing came after that. As long as you can tax your industry, you have power as a country, and you will not have hyperinflation.
Yeah, but my argument was still not about like taxing. It was about whether you own your assets and whether you own your own data. We live in a world where you don't own your own assets and you don't own your data. Web 3.0 means that you own your data and assets, and this is what cryptocurrency is all about. And the energy is like a price you need to pay for this freedom to own your data and own your assets. But anyway, we can take that offline.
I own my assets. I have publicly traded companies. I'm protected by the government. I know exactly what I've invested in. I own my assets.
And you own your data as well, right? And you own your data as well.
And nobody can hack into my account and take my shares of the companies that I own. I know this.
And you own your data as well, right?
No, we're not talking about data. We're talking about assets.
No, data can be an asset.
I'm talking about stocks that I own, stocks and bonds and funds. They can't take them away from me.
To jump in here, I think that you touched upon multiple interesting things, and I think that we are definitely maybe somewhere in between, because talking about this whole social aspect that you mentioned, that nowadays we have the social aspect. If we take a look back a couple of decades, there was no CEO that could have made an impact in a blink of an eye. It was just not possible in any way. So I think that's an interesting thing that we have to take in mind. And also the new generation, they have definitely a different kind of mindset. I mean, we have the fourth or fifth largest cryptocurrency, Dogecoin. We had meme stocks, and people were fully ready to lose their capital just for fun. So I mean, I think this is different kind of times, and at the same time, there are fundamentals. So I mean, it's very interesting for me personally, and I think it's some discussion that we'll have for, I mean, probably years to come, because the people might have different kind of angles on these. But I think another interesting thing that most likely all of the listeners are interested in, probably one of the last on the stock markets, where are we now? As you saw, the last year, the markets dropped or tumbled like 20 or 30%, so all of the largest indexes, which is quite a lot. And then from that place, we have already reached new all-time highs in all of the indexes as well. So quite a big gain in a small period of time. And where do you believe is this heading? Is this a good time to invest, or maybe you should wait it out? How do you How do you see this?
Nobody wants to start. I take the lead here then, because also Funderbeam last year introduced a Funderbeam market index, and also our index has been growing. So like mentioned earlier, we provide investments or investing opportunity into global tech startup private companies. And when I look at the growth of the index, then it's not only about the supply of the capital and investors coming and buying whatever they want to. But if I look at the numbers and fundamentals, as we put it this way, the financial results, the growth reports, quarterly reports, what companies have been publishing on the marketplace, then also the companies on Funderbeam markets have been doing well. So in a way, I can't say based on Funderbeam market and Funderbeam market index that it's been this massive unexplained growth, but it has been growth really supported by the growth of the companies being part of our index. And also looking around in the tech industry and tech stocks now going into the main markets, then also investors, and I think Paul said so nicely, that don't chase tweets, really look what the company is doing, read the company's plan and reports before jumping into the investments. And also a point or a note to retail investors, make sure you invest in the real Zoom. Because there are several companies named by Zoom, and then some of the mistakes very often retails do, jumping into the one of the tech stocks, not understanding that this is not actually the tech stocks. So really read the news and let's see what the stock market, the real stock market, especially when we talk about the most beloved tweeted stocks are doing.
Mm-hmm. Anybody else want to add something on the next things in the market?
Yeah, so if we look at the stage that's been set, there's been a lot of companies, industries, the tech sector, there's parts of the economy that benefited from the lockdown. And so one thing that I find suspicious is if you're a food delivery company that's losing money during a lockdown, when will you ever make money? I really don't understand. So you have to look at who has benefited. What was the first thing that came to people's minds? What was the first level of thinking that went into these companies, and which companies have prospered? And you see that across the board. But what we didn't think about during the lockdown was that the economy would start up again. And where we're seeing inflation, where we're seeing massive price movements, is in the stuff that's not sexy, the stuff that you chop down in forests. Lumber prices have gone crazy. Copper prices have hit all-time highs, and will continue to go up because nobody told the copper miners that we're going to transfer to a green energy economy, that everybody will need more and more copper in the future. Meanwhile, we're not mining anymore, and we'll actually go into large deficits over the next 10 years that can't be stopped. So there's a lot of opportunities in the more analog parts of the economy that did not benefit from the crisis, which will now make a furious comeback. And that's just part of the investment cycle. It's always happened. Timing it is very difficult. But we're seeing the stages of this rotation from the tech companies, they're massively overvalued by any metric, but that have grown also very quickly, to them now slowing in their growth, and the companies that did not benefit or that were shut out of the economy during the lockdown now making a furious comeback, and people chasing those shares and those products that they produce.
So from the crypto side, I can just, because this is like my background is, when Bitcoin is about like sending and storing value, then in crypto, what I would look at is something what is called DeFi. So this is actually building decentralized financial services on top of blockchain. So there's a lot of like different like insurance, trading, lending. You can lend money in cryptos to anybody around the world. So this DeFi industry in crypto is like right now booming a lot, and I would really kind of look into this. And I think in the next couple of years, this will really like go parabolic.
From the Nasdaq perspective, I can add, if you look to 2021 and further, so we believe that obviously that in case there are investors in the market, they all of them will need some companies to invest in, right? So and the feeling is that the post-COVID Europe's SMEs and including Baltic companies will more than ever need some capital market support for financing and no, in order to finance the recovery and restart growing. So we work hard on that, and we see very strong pipeline in the Baltics, Nasdaq Baltics for second half of this year. So we have two companies in Latvia announced the IPOs, Latvian local fuel service station operator Virši and Delfin Group finance service company. So there are a few more to come. So I believe there will be investment opportunities in the Baltics this year. And on the Nasdaq and group level, we are considering SPAC regulation here in the Baltics and also ESG, different products and initiatives to be continued. So I think that the like whatever comes, the like traditional stock exchanges will be there to serve the companies and investors. So it's just a like matter of choice and yeah, weather perhaps conditions.
Maybe another thing that I would like to ask regarding the crypto side, and probably Christian can address it. As already Paul's mentioned previously regarding the environmental impact, and Elon Musk has been tweeting regarding the topic. Is it really so that all of the cryptocurrencies are really bad for the environment, or are there different kind of currencies that are there?
Yeah. So first of all, the tweeting thing. By the way, he tweeted about taking a Tesla private as well, and that also impacts the stock price. But the energy question, yes, there are two ways how cryptocurrencies are kind of like upheld. One is something what is called proof of work. So this is the miners. So basically, they actually need to kind of like put energy into mining cryptos. But then there's also proof of stake, and many cryptocurrencies are already on proof of stake. So it's just algorithmically kind of like making the network secure. And for example, like Ethereum is going to proof of stake, the second biggest cryptocurrency in the world. So that will already kind of like lessen the environmental impact. And also in Bitcoin's case, the world's biggest mines are, for example, in Iceland, where there's like sustainable energy. And I think like definitely the Bitcoin itself as well is moving to more sustainable sources of energy. But I would still like to kind of like emphasize that there will be a cost to freedom. So there is always, and in the short term, we'll need to pay it.
So history teaches you that freedom has to have responsibility. And the fact that there's one sustainable mining operation in Iceland does not compare to the fact that there's tons of coal being burned in China to mine Bitcoin. So obviously a good start. And if that energy is produced, it could probably go to better uses than Bitcoin mining in terms of sustaining society. And again, when you're looking at investing is not something you do on an individual basis. It has to do with the context of the world you're living in, the values of your society, and what kind of world you want to live in. If you want to live in a world that is digital and that is beyond any sort of responsibility to the physical realm, then by all means, go ahead. It hasn't been tested. Be careful what you wish for, I would say. But at the same time, it bears responsibility. At some point, you have to be responsible to the world you live in. And as an investor, you should be cognizant of the world you're shaping through your investment choices. If you're investing in green energy companies, you're investing in something that will change the nature of our economy and that will create a greener future for our children. And if you're not doing that, then you're not on the right side of history. I'm sorry.
Okay, but by the way, but think about this situation. Like, what is the cost of one country being able to print endless amounts of dollars? Can you think of all of the currencies?
They're not printing anything. It's just we live in a digital world in dollars already, right? So it's not like somebody's physically chopping down trees and printing money. Okay, so let's get away from this printing.
You think I'm thinking? No,
term,
of course,
okay?
I'm not thinking they're printing paper. I mean, printing the monetary supply, like all of the other currencies are inflating.
They're just adding zeros to bank accounts, and banks are lending that out. That's what actually creates money. That's how our society works.
I think it's pretty interesting discussion also that the responsibility lays down to the end investor. It lays down to funds, all the bankers, retail investors, where they put the money. And when we think about the traditional industry, when the slave labor is used, a very cheap labor for the production of the product of the companies that are stock exchange listed. I think we in a way, all the investors and also to the listeners of this talk, when you really invest in some of the companies and instruments and actually check what the company is doing and what's the responsibility and where the product is coming from and what is actually the price of the product. And it may go to, really Bitcoin mining, but it also may go to any fashion industry. And that's this our own ethical dilemmas as the investors. So where do we invest and what is our message by investing into different type of assets? So actually, Paul, in a way, very much agree with you. Where do we put as an investors our money and what will the companies and the assets actually hear?
Invest in what you believe in.
Okay.
I believe that free.
Sorry, there's just this time lag, sound lag, and that's why sometimes I don't understand when you finish your sentences. There was something else that you wanted to mention, Paul?
No, you invest in what you believe in. I totally agree with that, and I believe in responsibility and in providing opportunities for capital to grow and for people to invest responsibly in the kind of world they want to live in, understanding that they are not alone and they do not, no man is an island, no person is an island, that you invest not only in companies, but you invest in your society. And we can never lose sight of that. And if we do lose sight of that, it's not going to end well.
And Paul, after this, I will send you a Changes app link as well, so you can short Bitcoin with Matt as well. So don't worry about it.
We're gonna have a great talk after this, Christian. I can't wait for it. I'm already having fun.
Yeah, and maybe by you already kind of started that. We probably should go in the last section of our discussion today, but I will give you like a final 1 to 2 minutes. Maybe you could give to your mind the best maybe the best recommendations on where to start if a person is new in the world of investments. Should they try some stocks, go for indexes, read something, just some tips to get started their investment journey?
Well, I guess I can take a lead on this one since I've tried myself in the role of a coach and I see a lot of people who are getting into investments and what they're doing. And to be honest, the biggest mistake, I mean, okay, we can compare active trading and investing, and there are many things that are intertwined and many things that are different. But I think that the main concept of anybody getting into investments or trading, you must never jump in with real money, just in my opinion, right into the action. Because when you have no idea of what you're doing, you've opened a interactive broker's account and you have a few charts in TWS, which is just rocket science degrees necessary to operate the bloody thing. So you really need to take your time. Because even me, when I was in my years of active trading, there is so much stuff going on. There is so many things that you have to keep track of that you really need to be zoned in. And that thing only comes from experience. And if you do these things with real money right away, that experience will become very expensive. As in my experience, so many of my students, some of them sent me their trading reports when they've lost hundreds of thousands of dollars before even sending me a message saying, how did you do it? And I said, listen, do you understand that there are certain procedures which you could follow, which could get you to a certain level of understanding of the fundamentals of the technical analysis or whatever you want to do, whatever market you want to trade, if it's Forex, if you're crazy enough to trade something like Forex, or if it's ETFs, or if it's crypto, or if it's crypto trading or crypto investments or stock trading or stock investments. There are certain things that you need to know and understand and get used to before you can even risk $1 of real money. And that's what would be my suggestion. Always, either you can spend a lot of time reading online and watching some YouTube videos, or you could get educated, have some paid education from somebody who has done this before. But just go. Some people are saying, oh, you learn by doing it. I mean, that's gonna be very expensive. So I'd be very careful and take a rain check on that suggestion.
Taking over from here when I was working for Tallinn Stock Exchange, then we saw a lot of patterns, what especially the retail investors, when they entered the markets, what they made. So we also introduced a lot of education programs, conferences, books and stuff, but I would exactly continue where Thomas ended, is first read, and read. And also to make sure that you really understand there are many investment opportunities. It's not only stock, and it's not stock investing and not only Bitcoin, but there's art and real estate and funds and many different assets where to put the funds in. And there's people who like books and people who like movies. There's also people who like stocks and people who like more real estate. So make sure you know which type of investor you are, where you would like to invest, what's your risk tolerance, can you sleep at night when the stocks are falling? If you can't, never go into stocks. So first, make sure you know yourself as an investor before jumping into any investments. And then there's nowadays a lot of investment clubs, at least in Estonia, and I know in Europe, a lot of Facebook groups, podcasts, blogs. People can get access in their own language. So there's a lot of learning you can do and talk to your friends, but make sure you know yourself as an investor.
Yeah, I would agree with this very much. There are so many psychological implications as well. So many people think that it's about having the charts, just clicking the button and printing money, when in reality, there are so many aspects to it, one of which is psychology. And my God, I had even personally such troubled time both with investments and active, especially with active trading, when you're just walking around, your face is as white as the wall behind me. And most people cannot deal with it. I mean, so many people get at all-time highs, and as the market goes down 1%, they just sell off everything. And then it goes 2% up, they buy again. So they buy high, sell low, just out of psychology. And this is something that you have to take step-by-step approach to the markets, go through certain practice stages, understand it, how it works, and start with a little bit of money. Some people mortgage their houses to put into GameStop and lose everything. It's incredible, but that's why education is number one.
One suggestion, what I would add to his point is TWINO, for example, and Funderbeam as well, and I mean Change as well. All of these investment apps, they have their communities. So for example, Funderbeam has a discussion forum about startups. Like we, for example, have a Telegram group with thousands of people every day discussing about investing in cryptos. So I think like all of these investment platforms have communities, so join them as well. And I think then the previous recommendation is super good about the education and just getting started with small amounts.
Yeah, in terms of investor education, there's never been a better time to be an investor. The resources available now are so much better than they were even 10 or 20 years ago. It's incredible. So as with anything, like there's not everybody's going to be a top trader, but focus on something you're good at and educate yourself, not just about the market, but in general. Learn about history, learn about, as Thomas mentioned, about psychology. We don't change as people. History has changed, but it always rhymes. And understand market cycles, understand what is attractive about the asset you're investing in and what could not be so attractive about it. Understands ups and downs, and if you're being lucky or if you're good, or because it's better to be lucky than good, but understand the difference is very important. And be careful, But you can't play this game without using your own money. It doesn't count otherwise. It's just like you can't play poker without any stakes, right? So in investing, be careful. Understand if you're speculating, if you're trying to build capital, there's a big difference. And if you start thinking about returns you're making right now and how many months will take you to buy your own private plane, then sell everything.
And from my side, just one thing: diversify.
Well, we cannot get far without diversification. When it comes to investments, I hear from so many people that they put everything into Dogecoin, or they put everything into GME or into Tesla when it was exploding, or anything. And I mean, some of the people made crazy amounts of money, but when I'm looking at it, it's like, wow, dude, you're a ticking bomb. Because that's the thing. I mean, profits or losses don't really define you as a trader. Your approach, your risk and money management, your sustainability of your approach is what explains and actually can predict your future success. So absolutely, diversification in terms of investments is the key. I mean, you can go crazy and you can diversify into 50 different assets, 50 different stocks, but then you pretty much will be following S&P 500. But at least 5 to 10, 15 stocks, I would say, would be the minimum that you should start with, and perhaps consider having different sectors, obviously.
Yeah, I think that diversification is a good idea if you already have capital. But if you don't have capital, what we've seen in this market is that people are making these what they call YOLO bets. You only live once bets. And some of them work out, but most of them don't. The vast majority of them don't. Be very careful. But if you're getting into investing, focus on an area that you find interesting, that you think has potential, and learn everything you can about it. And people have done this successfully in crypto. How long that lasts, we'll see. But in the meantime, you've made money. Congratulations. But find something that interests you, that you care about the historical beginnings of it, or the parallels, and how that could repeat itself in the future, and learn as much about it as possible. And then start with money, as Thomas said. You can't play this game with fake money. You have to play with real money. And if you're not ready to do that, then you can seek out a professional.
Okay, thank you. Thank you for your recommendations. I think that, well, I hope that our listeners will find them helpful. We can now move towards the question section, which I am looking at right now. And the first question is about day trading. So a person is asking, so what is your opinion on daily trading and observation as well there? It is often said that it's gambling, not investing. Maybe Thomas can address this, because you mentioned that you have been doing that in your past.
Yeah, day trading, it's always a good way to make an example of a chart where you can imagine that the higher the risk, the higher the return. The lower the risk, the lower the return. The reason why so many people are going into day trading, and especially some crazy things like Forex, which even me as a coach, I've never recommended Forex. For me, it's one of the worst things you can ever do. When you're going into day trading, you have to understand that your capital is at risk. I mean, with stocks, it's absolutely different. But again, as we spoke about it before, you need capital to get into stocks properly. And if you want to do private equity and investments into private companies, there's nothing to do in that segment without at least $1 million. So a lot of people are getting into day trading because they don't want to turn $1 million into 1.5 million. They want to turn 5,000 into $1 million. And of course, when you even think about it logically, it's got to entail a just volcanic risk. Is it possible to do? I mean, in the times of crisis, when the volatility is really high, there are a lot of places, a lot of huge swings in the prices that you can make money and you can benefit from it. But in my personal opinion, from somebody who has done different types of trading, pretty much anything there is, I've tried, and I've done quite okay in certain ways of trading and investing. I've done quite poorly in others. And I can say that active trading, especially something leveraged like futures, CFDs, and Forex, it is the hardest and the least probability of making it in terms of the financial markets. But of course, if you have just a few thousand and you want to make a name for yourself and you want to get somewhere within a few years, that's really the only path. unfortunately. But be ready that about 95% of retail traders, especially active traders, lose money. 90% of those usually lose money because they have zero idea of what they're doing. Others, a smaller percentage is losing because of psychology and other technical reasons. And then only a few percent actually make a lot of money. You need luck, persistence, proper preparation, proper information, proper practice, and then you will have a standing chance of making it. That's how I would put it most realistically.
Perfect. Anybody else wants to add something?
Yeah, you make the biggest money by buying good companies and being patient. And day trading, when you're trading on a daily basis, it is speculation. And the good day traders can align probabilities to their advantage, just like card counters and blackjack. That would probably be the best comparison. But how long your system works is to be seen. And the more successful it is, the bigger the probability that somebody else catches onto it and the longer works. So it is a constant struggle. And there are times that you will wish you had that paycheck coming to you, and that you hadn't quit your job, because fresh capital is what you need. And if you read the Reminiscence of a Stock Market Operator is one of the classic books of investing. Anybody that's serious about money management has read this book many times, and it tells the tale of a trader back in about 100 years ago, just speculating all over the place and being blown out of the market, coming back in, and so forth. It's not easy. It is taxing on your mental well-being. It is psychologically extremely taxing. And if one thing goes wrong and you get wiped out, you're done. And you will not be able to raise new capital. You will not have any capital yourself. So, and that's probably not going to do well for you if you're in a family or people are depending on you for sustenance or upbringing and so forth. So be very careful. It is a massive responsibility to shoulder. And the market in the short term is there to help you separate yourself from your money. In the long term, it will make you lots of money, but that's through patience and perseverance, not through day trading.
Okay, thank you. Another thing that I would say to people is just to try out with real money, but not too much, and see how you feel. And I can bet that your emotions will be all over the place, even if the money moves a bit. So that's something to keep in mind, that your daily life might be impacted when you start trading. But moving forward to the next question. What is your opinion on the most common mistakes made by beginners and experienced investors? So you already mentioned in the past, so maybe you can just quickly outline again which are the main mistakes by beginners and then experienced professionals.
Patience. I would say just one word. Experienced investors know you need to have patience in investing in companies. Both patience, getting to know where you put the money in, and once you're in, wait for the time when to get out.
Absolutely agreed. And also, you have to look at your money as an instrument, not as a way of. A lot of people view their money as a Mercedes, as a Rolex, as a whatever in their trading account. And that's one of the worst things, because once you see minus 1%, you're getting away from that Rolex. You're getting away from that car that you want to buy. And that just influences you so much. And it becomes nothing but a miserable experience. And also, it's an easy one, but I think I should add it that you probably should consider working only with your own money and not borrowing money from anybody. Because a lot of people borrow money from their mothers, fathers, brothers, a bank, and they mortgage their house and start trading. And that's the reason also why I said that the stock market is not exactly for everyone, long-term investments. And that's also a big mistake. People think that they can go into the stock market buying just one stock and praying on it to fly to the moon. And the thing that I'm trying to say is that expectations. As I say with my students, from trading or investing, expect nothing apart from hard work and a lot of dead nerve cells in your brain.
One of the things what I would tell from a trading app perspective, because we see all of the customer trades as well, what normally like typical mistake what a retail investor does is when there is a little profit, they take it out. But when there is a loss, they let this loss psychologically stay for a long time. So this is again about this card reading like tips, it's all about the odds. And I mean, it's like, this is really tactical thing, like use your stop losses, like don't take a profit in like when you see green right away, because we see these mistakes a lot from our retail investors.
That's a really good tip. Absolutely. I see that all the time as well. There are people who are risking $100 to make $20. And then I'm thinking, look at, you have to do the calculation. So you'll be right 5 times and then one mistake will wipe you out.
Exactly.
So it makes no sense at all. And I always say when I was in my years of crazy active trading, my average take profit would be at least the three times the size of my average stop loss. It's difficult to do it. You have to manage your expectations. You must understand what the market is telling you, what's possible, what's not, how strong will be that initial impulse if you can even predict it. And only then, I mean, if you have that expectation and the volatility is not too crazy to just kick you out all the time, you can take the trade. And so in that case, you have to be right only like 30 or 35% of the time to break even. This is the number you can work with, but not the other way around.
Mm-hmm. Yeah, in any market, there's a buyer and there's a seller. And if you're a buyer, understand why somebody would be selling to you. And if you don't understand his rationale, then you're not going to know how long to hold this position or who you'll be selling it to in the future, or if you even need to sell it. If you're generating cash flow and dividends from this investment, then you might not have to sell it for a very, very long time. But if you're speculating, and if you understand you're speculating, understand who you could be selling it to. And also understand that nobody has to ever buy anything from you. And that if the position isn't managed correctly, it can slide and in some cases go to zero if you're not taking care of the position yourself. So be aware of both sides of the market. A market is two people meeting in the middle, and understand how the other side is thinking. And if you're buying and somebody else is selling, understand, or at least have a conception of why it is right for you to be buying now and why they are making mistakes selling. And if you can't create this thesis in your mind, or at least write it down and be aware of it, then you probably shouldn't be doing it in the first place.
Mm-hmm. Okay, thank you very much. Moving forward to the next question, it's well in the direction of stocks. So maybe some pro tips for due diligence on picking individual stock.
Well, I can probably say what I usually do for if there is a stock that you've heard about and you're really interested in investing in it, there is always a problem among a lot of my students that they always get in for some reason at an all-time high. So when a news came out, and you're just opening your trading station, or it's like a week late, it's too late. So, and a lot of people are falling victims to FOMO, the feeling of missing out on an opportunity, which has cost people probably billions upon billions of dollars in the past 5 years. And I would say that whenever you see the opportunity, look at it, study it. And the best way, for example, you can even use something like smartwallstreet.com or simplewallstreet.com. And there are many free sources of fundamentals of the analysis of the companies, the projections of the numbers. If the companies, for example, there might be a company that gets all its profits and it just uses it for dividend payout just to sustain their legacy of increasing the dividends. That means that the company is not really improving, it's not developing, it's just focused on paying out dividends. It's not the company that has exponential growth potential, just as an example. So you have to be open-minded and understand what the hell is going on in the company. And then the next step would be finding an interesting entry point. And of course, entering at all-time high is just, for example, me right now, I pretty much hold almost nothing because it's difficult for me to enter at an all-time high. So this is something that if I'd be entering, I'd always look for an opportunity at a discount of 20%, 30%, 40% of it. So just looking for undervalued stocks and knowing what's behind them, the intrinsic value, using some free sources that I just mentioned.
Maybe I would also add, I know it's coming from the startup industry, but seeing the stock market myself, it makes also sense to do some due diligence for the management of the company. At least read what they've said, read how they talk about the company, what they talk about the future of the company, how they treat their employees, how they treat their shareholders, and all of it. That also very largely reflects back to the future of the company. It's kind of, they say that, for the stock markets listed companies and exchange listed companies, it's mainly about the fundamentals and share price, and investors very often undervalue the actual impact of the management. To really read about the executives and the management behavior and messages.
Yeah, I would definitely agree with Kadi. In the sense that you have to look at what the values of the company are and how they think and why they've been successful, and what kind of ability they will have to be successful in the future based on their values and their methodology. If you look at Amazon, it wasn't successful because it's now the biggest bookseller in the world. It changed their business model. It learned in one industry and applied it to something else with scale and with cheap capital. AWS is what's made this company now, not just online retail selling. There's different businesses they've gone into successfully based on what they've learned from previous experience. Unfortunately, when it comes to buying stocks, you're usually buying good stocks at high valuations. And the question is, can the management hold on and continue to be insightful and creative in terms of opening up new markets for themselves? Or is it just hype? And unfortunately, a lot of these companies that seem like they'll be world beaters don't end up doing that. And it's only 4% of companies in general that create the difference between what stocks return and what government bonds return. And stocks have destroyed the returns of government bonds over time, but it's just because of 4% of companies. And I'm not sure how many retail investors know that. So it's very important to look at the companies themselves, look at how they make decisions, what their values are, and look at their customers too. Look at why their customers want to buy from them. And I think that a lot of people, based on social media and your experience in social media, it gives you a great ability to research stocks, because I know you've researched somebody on social media. So do the same thing. Be curious and look at all elements of these companies and what they do. And start by reading annual reports. Go to their webpage, look at their presentations. And if you have questions, and follow up on them. Successful investing is about being curious. It's about being responsible with your money, but also being curious about the companies that you're investing in. And if you're not curious, then you're going to miss something, and it's probably not going to be good for you.
Mm-hmm. Okay, last couple of questions. One of them I can address, which is in the direction of the industry that I work in, so peer-to-peer lending. So the question is, what will be the end story for investors in Investio Group here? So those are a couple of platforms that somehow disappeared and look like a fraud cases. So my recommendation would be just to do those things as everybody mentioned right now. And in peer-to-peer lending, if you're from this industry, I think it's very critical that you really take a look on the company. You go to the website, you check whether there's real people behind the project. It's also nowadays possible to check the financials. So if they're audited by any Big Four or Big Eight or at least known auditor, then of course it's a lot safer bet than compared to a new platform that are not too transparent. And the last question that I would like to ask you is, what's the best way to avoid FOMO, so the fear of missing out when making investment decisions?
Well, I guess I can take the lead on this one as well. And the FOMO oftentimes comes from two sources. The FOMO itself, just in my opinion, FOMO itself, and the source number two is not knowing where actually the proper entry point would be. So that also it comes from experience, understanding the technical knowledge, because that's something that, a technical aspect of trading could be helpful at, when you actually can identify certain places where the market is consolidating and has shown in previous history of the price action of the company, that would be a good place to enter. So a lot of people are just entering blindly based on a wish to enter and not being late. But I think that it comes from the them not being educated and them not knowing where to actually enter?
I think FOMO is the way for humans to live in this world. It's what we've been talking about psychology. There's not only FOMO in investment world. There's FOMO in you go shopping. There's a FOMO. You go to the market. There's a FOMO. You have a good band playing in your area. There's a FOMO for not getting to tickets. So the best advice to really avoid FOMO in investment world is not to invest at all. Because when we talk about the best stocks, we talk about the best startup investments, we talk about the best real estate outside, there's always FOMO going into. So it's kind of part of this industry, but exactly like Thomas said, is that get yourself the limits of where you're going in and then where you absolutely put the stop on this instrument you definitely want to have in your portfolio.
Okay, perfect. So I hear silence. So I believe that everybody have addressed that question. I think another, the last thing, at least from my side, that I would like to mention is, almost the last thing, is that we'll also have a masterclass tomorrow. So if you are a guest of TechChill or you're just follower of TWINO on Facebook, you can see that we'll have a masterclass on this very topic, investing. So if you're interested in the very beginnings of how to start, you can join us tomorrow morning, and I will be there once again, so together with my colleague. Other than that, huge thank you for our great panelists for joining us and sharing their knowledge. It was very, very, very pleasant, and I enjoyed it a lot. I hope that the listeners had a great time as well, and that's it from our side. Thank you very much, and have a lovely evening.